Hello and welcome to today's Dalal Street Week Ahead video. Now in today's Dalal Street Week Ahead video, we'll be taking a look at three stocks, which is Reliance Industries, HDFC Bank and Infosys. I'll take a look at them in terms of equity plus option trading. Now before we go into that, let's take a look at the news to be affecting our markets this week. Now on the local front, the key news to be affecting our market this week are two. Number one is the LIC Adani issue. Now it was always known roughly that the government came in and helped the Adani shares when the Hindenburg thing happened and all, and the pressure came, and now it has come out in the open. Basically, it was a rumor before, now the numbers have come out that yes, the government poured a significant amount of money from LIC insurance into Adani to sort of bankroll his safe passage. So now we'll have to see how the market reacts to this news tomorrow morning, as and if it reacts to how normally it would, then we can expect a fall in the Adani Group shares plus LIC, which will naturally affect the headline indices. So that's why I'm talking about that. The second piece of news is going to be Kotak Mahindra Bank. Now, there are the results to release over this weekend, but Kotak Mahindra Bank results are key because I like the way the management put it out. Number one, yes, the results are not good. They're subpar. But Kotak and ICICI Bank, for example, have released the results as they are, raw, and let people see the whole picture. But HDFC Bank, for example, last Sunday I had done a video only on HDFC Bank over the results. They'd done a lot of creative accounting that basically they buried a lot of stuff, cooked the books and made the net profit look good. Now, Kotak has gone and the management in the commentary has highlighted certain weaknesses which are plaguing the private banking sector. So I think that these results of Kotak are going to really guide a lot of the big money players in terms of their investments in the private banking space for the coming few weeks and months. Why I'm specifying private banking space? Because I believe the public banking sector stocks are going to do much better than the private banking sector stocks down the road, because the private banking sector stocks are plagued with a lot of issues, and right now, which before PSUs had, now private guys have. PSUs have fixed a lot of that. So that is why I think it's very important that it will affect the bank Nifty in a decent way for the coming sessions, and that's going to be key. Then on the international front, we have the Fed interest rate decision coming out this week on Wednesday. We have the BOJ interest rate decision and the European Central Bank decision coming on Thursday, 30th October. So these are all going to affect the markets, but I believe the rate decisions are sort of already set in stone. So what's really going to make a difference is what the commentary comes from each of the chairmen, whether it's the Fed chairman, whether it's the Bank of Japan chairman, or the ECB chairman. So that is what's really going to be watched, as it will tell us how they plan to play out the coming thing, especially with Trump tariff was sort of a bit escalating with China and all. So there is too much yes, no going on, which is, it will be interesting to see how the central banks interpret it for future rates, and that will affect the global markets. So that's it on the news front. Now let's start with Reliance Industries, then I'll cover HDFC Bank, then I'll cover Infi. Now coming to Reliance Industries. Now if you've watched the previous videos I made on Reliance basically I had given a target of 1470 in the stock, and this week on Monday it went to 1470 and then stopped. The whole week it could not really go above that zone, and that is why I've put that in blue, because that's the old resistance. Now the new picture of Reliance which is there is now there's a resistance at 1490 and support at 1435. Now, as long as Reliance is between 1435 and 1490, this is a no trade zone, as you're not going to go up, you're not going to go down. If it breaks 1490, you can go to 1512, but that long risk reward will be absolute rubbish. I'm looking at more of a downside move on Reliance, because if it breaks 1435, I think it will fall to 1415 and breaks that 1390 and 1370. Now, why are the supports so close in Reliance compared to other stocks which I usually cover? Because Reliance is the range of the medium term is, if you look, it's pretty tight. The medium term is in a box range. So that range is very tight. Plus Reliance, like the Adani Group, has a lot of support from the government. And the reason I'm looking at it from a more bearish angle is Reliance's results were not the best in the market. They were average. Now, those are with them getting benefits from the Russian oil. As everybody knows, the main person who benefited from cheap Russian oil was Reliance Industries. Now, that benefit has gone away due to Trump now. And once now Reliance starts buying oil from the Saudis and all, that benefit has gone away, so that's naturally going to hit their profitability. So the next quarter, I expect Reliance results to be worse, to be going down. So a lot of the big funds may be looking at it the same way, and if they are, then Reliance will most likely break 1435 and go to 1370 in the coming days and weeks. Why I'm giving a bit more longer time frame for Reliance, as I said, it's number one, a very major player. It's got a lot of support, and so all those things will factor in and not allow clean moves to come in. Let's say if it was a normal petrochemical stock, it would do it in 2-3 days. But being Reliance, it's going to take a bit longer for the whole thing to develop. But I am bearish on it. As soon as it breaks 1435, I'm going to be going in with shorts. If by chance it goes to 1490 or 1512, I'm also going to go in with shorts on the formation of the chart. So that's my view on Reliance. Now let's take a look at HDFC Bank. Now, HDFC Bank I had covered last Sunday, and in fact, it was the first time I did a Sunday video only on one stock because I covered its results and I had shared that I believe a lot of what HDFC Bank had put in its results was hogwash. The net profit made it look up due to the treasury and everything, but the rest of the numbers were bad. And they tried to cover it up with creative accounting. Now, the stock has given that response too. This has posted results. Naturally, retail must have gone in and bought because the net profit went up. This is Monday's price bar. We can see it went up to the resistance I had highlighted 1017, stopped there, and has not been able to cross since, and then ended up coming straight down. It went on Monday up, went on Monday, tested it, couldn't cross, went on Tuesday, couldn't cross. Then it went on Thursday, got butchered, and came down, and then on Friday, completely collapsed. Now, what's my view on HDFC Bank? Now, HDFC Bank, the price formation which is shown, has shown us that this kind of price bar will only form when big money sells, not when retail sells. So now, according to me, it has shown that yes, they are in tandem, that the numbers were soft and they were not the best. So according to me, as long as the HDFC Bank is between 1032 and 980, this is a zone in which it can have two-way moves, because whatever new, let's say a bit of positive news comes from the Fed, it might have a small bounce. A bit of positive news comes from the trade deal, it might have a small bounce. But the longer-term trajectory, medium-term trajectory, basically is going to be downwards for HDFC Bank. So my trading plan is only going to start once it either hits this or it hits this. Why? If it hits this, then I'll confidently start shorting HDFC Bank. If it breaks 980, then I'll also start shorting HDFC Bank. This says if it breaks this zone, then it's going to 960 and then it's going to 940. That's my view. May be wrong, but we can see already what HDFC Bank did, with the view I shared on last Sunday's video. Anyone can open it and see. Numbers are the same, levels are the same. That it went to that zone, got stopped because there is also hogwash. So my trading plan, a break of 980, I go short. By chance it has a dead cat bounce, then I'll use the dead cat bounce to enter short at this point. So that's my view on HDFC. I'm bearish equity, so naturally it's a no. As even if you think the results were good, there are other banking stocks that can give you a way higher return than HDFC Bank ever will. So better to go put your money in those kind of stocks rather than this, which has been largely dead. Even if you look at the medium term, for this full year, it has just been in this box range. So that's my view on HDFC Bank. Next, we'll take a look at Infosys. Now, Infosys, basically, there is a medium term, so there's a short term and a medium term view. Medium term, as long as Infi is between 1580 and 1435, this is one big box range. As we can see, it started this box range in April, not even April, in March. Yes, early March of this year is when this box range formed, and it's been within the same range from that time. So in the bigger picture, that range will continue playing out. But in the shorter picture, between 1560 and 1580 there's a strong resistance, and 1505 is a strong support. Now IT stocks have done very well, and the reason I believe no one should keep a bias on the IT sector now is if a trade deal comes, one of the largest beneficiaries of a trade deal is going to be the IT sector. So the IT sector can end up doing well. So my trading plan is pretty simple for Infi. Between 1480 and 1580, neutral zone, neither long, neither bearish. If it breaks 1480, then it's going back, starting a new down move. Because it will go to 1435 and break it, then definitely. Because with us, so much trade deal news going on, if it breaks 1480, then it's done. On the other hand, if it breaks 1560 to 1580, then it's got a medium term move. My view is pretty simple on Infosys. So what I'm going to do, I'm going to sit and wait for it to decide what it wants to do within the zone. Then I'll decide to take whether I want to trade Infosys. But within the zone, I'm not taking any equity. I'm not taking options. I'm not taking anything. It's a wait and watch. So that's it for these three stocks. If you like the video, then hit the like button, subscribe to the channel, and click the notification bell.